I am wondering, I saw a great headline on the Bloomberg earlier saying just because there is a market doesn't mean you need to trade. How are you trading at the moment? Where are you adding positions and where are you opportunistic?
Well, what we're doing is getting rid of those stocks that we were not very excited about for one reason or another, over the last year, and buying more of what we like. In other words, we're not reducing our holdings. We're not adding cash, but we're trying to find those bargains. Now, we know that we may not be at the absolute bottom. There's no question about that because the studies we've done indicate that the average decline over the years since 1987 is about 50%. That's normal bear market decline. So we're not near that in many of these countries. So we have to buy very, very cautiously. But I think it's a good time to be picking up some of the bargains and getting rid of those things that you're not so excited about. But the idea is not to increase cash too dramatically.
I want to get to your conviction when it comes to Indian markets. Given the record sell-off that we saw in the previous session, are you still convinced that this is a good time to add to Indian positions?
Definitely. For those companies that have strong balance sheets, are going to be paying dividends. And you must remember that many of these companies around the world, not only in India, are not going to be harmed that much by what is happening now. For example, broadcasting companies are going to be increasing their business because you're going to have many more viewers, many more listeners, that sort of thing. So we have to look at each company individually. But our excitement about India has not diminished at all. We think that it's a great time to be picking up bargains in these markets like India.
Mark, generally speaking, last year the trade of the year was U.S. versus rest of the world. As you take a look at this year, are you positive on U.S. equities, or do you really prefer rest of the world?
Well, I like the U.S. equities that have a global footprint, and particularly those global companies that have a big footprint in emerging markets, because if they have a good, strong balance sheet, as many of them do, they'll be in a terrific position to pick up market share in these emerging markets as a result of the problems that some of the local companies are having. So I think it's a good idea to look at some of these multinationals in the U.S.
Are you able to give us a few names of those multinationals in the U.S. with big footprints overseas?
Well, by the way, talking about Alibaba, it's probably a good idea to look at Alibaba at this stage, particularly if SoftBank is selling, because the price, may get weaker, and that it would be a good example of a company that's really becoming very global. Listed in the U.S., of course, Chinese company, and the Chinese market has not gone down very much. But there are a number of companies, multinationals, that are in the consumer business that are quite interesting that, we should be looking at.
Mark, as you mentioned, China hasn't really lost very much at all. In fact, weirdly, maybe the equity market as well as the currency almost acting as something of a haven in this part of the world. Do you expect that kind of anchor role to continue? What do you like in the Chinese market in terms of, as you say, companies with good fundamentals that are going to be able to see out the other end of this still intact?
Yeah, the Chinese market, I think, is going to continue to outperform other markets because the Chinese government has taken measures to really prop up the industries and the companies. And I would say that companies that are in the technology area might be really interesting in China right now. I noticed that on high, Foxconn has got about 300,000 workers back to work. Out of, I think it's about 600,000 or 700,000 they have. So that's a good sign. And I think the latest plan is to get 500,000 back to work. And that means that these companies are, coming back again and, of course, trying to maintain their market shares.
What about Southeast Asia then? What sort of opportunities are you seeing in Vietnam, Indonesia. I mean, you sort of take your pick when it comes to valuations, and you have so many markets around this part of the world trading at pretty much distressed levels, right? Is it tempting to you at this point, or do you really need more visibility as to what happens at the end of this crisis?
No, it's very tempting. I think the way to look at it is this way. You've got to assume that we're going to have 2 quarters of no earnings or losses, okay? Once you plug those numbers into these companies and look forward 2 or 3 years, when the recovery comes, you can see that even with those losses, the numbers look very attractive. So that's the way we would look at it. And you can find these opportunities in Indonesia, in Vietnam, Malaysia, Singapore, Thailand, you just name it. There are opportunities all over the place.
Mark, I want to go cross-asset here with you. What is the further downside risk of oil now that we're already at a 24 handle? Is there further downside risk?
Yeah, I think there's further downside risk, although, we've gotten pretty low at this stage of the game. And by the way, the fact that these oil prices have gone where they are going to help many of these countries, including India, particularly India, maybe even more than China. So this is another plus factor for many of these countries that are oil importers. By the way, Indonesia is in that category as well. So even if the oil prices don't go down lower than we are now, they're still going to be very, very good for these countries.
And finally here, thoughts on your calls on gold. The rally recently has looked eerily similar to 2008 when you saw a bottoming out as everyone wanted cash. But now you're starting to see a little bit of buying over in gold as people return to seeing that as a traditional safe haven. Your thoughts on gold's strength?
Yeah, I think the gold is going to continue to be strong. Of course, what surprised me was the downturn in gold prices when you saw markets and gold go down at the same time, and oil at the same time. So I think that was just pure panic. Everybody was in a sort of a crisis mode, and in a panic situation, they were selling everything, which is, I think, a mistake. I think people should have gold, and it may be a good time to increase holdings in gold. In fact, I'm thinking of that myself.